Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Mike Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, as always, Michael Becker.
Hey, Paul.
So in the podcast, we're going to talk to Supriya. And Supriya is a success story. She closed on a little value-added property over in the Cedar Springs area of Dallas not too terribly long ago. But before she got to that point where she was able to buy a multifamily property, she has, I think, a pretty interesting and dynamic story about where she grew up, how she came to where she's at right now, how she learned about multifamily, and she's actually done it. So I think what we're going to learn a little bit today is, learn, jump in, and be successful. So I'd like for everybody to meet Supriya. Supriya, meet everybody.
Hey, Paul. Thank you. Thank you for having me on the show.
No problem. Thanks for coming in. So I thought we'd talk a little bit about you, and we're going to talk a little bit about your multifamily property that you purchased in the Dallas-Fort Worth area. But I really want to know a little bit about you and your background. Can you tell me a little bit about you and where you came from?
Mm-hmm. Sure I can, Paul. So I'm from India originally. I grew up there, did my undergrad in engineering, and came to the U.S. for my master's degree. I went to Texas A&M, and once I graduated and with my master's degree, I came to Dallas for a job. And that's what I've been doing. I've been working in Dallas for the past several years, and I work at a large technology company headquartered here in Texas.
So your background is really high technology. So you never had a multifamily background prior to buying multifamily?
No, I didn't even have a single family background. So growing up in India, we didn't even own a house, so I didn't even have any kind of background in owning real estate.
But you do have a house here, so you
Yes.
knew a little bit about owning real estate.
Yes.
Here in the United States. So tell us a little bit about how you got into multifamily. And now, did you look with books and tape, or did you join an investment club? Did you go to your neighborhood RIA, real estate investment group? How did you get into multifamily? Tell us a little bit more about your background.
Sure. I joined a real estate investment club, but that took me a few years. I just didn't know what was available to me out there. So I was very interested in real estate investing. And like most people, I started thinking single family. Yeah. And I was doing it on my own. And then a few years later, I realized that I need the help of mentors and people who really know what they're doing. Because I'm not just dabbling in this. I wanted something more, something that I could go bigger and do better with. So I joined a real estate investment club. Yes, I did.
And so they helped you. They kind of taught you a little bit about single family and multifamily, and you decided to go down the path a little bit for the multifamily side. So tell me a little bit about, did you start off going into your own deal right from the beginning? Did you go in as a passive or kind of a limited partner into the deal? How did you jump in?
Good question, Paul. So what I did was I joined this investment club, I would say a little less than 2 years ago. From the day I joined it, I knew I wanted to be a lead. But I saw and I realized
the lead is a managing member, right?
Correct. Lead's the managing member and who puts leads together.
Right, the person who puts the transaction together.
Correct.
Okay.
But I quickly realized that I need to get some education under my belt. I just can't go do it and do it on my own. So I started being a passive investor, investing with other lead members, managing principals, that is. And I did 5 of those before I bought my own as a lead. So that's...
Was that a valuable experience for you, just kind of see how other people have operated? What did you learn from investing with some other people in their deals?
Extremely valuable. So I did a few... I think most of mine are value play, maybe one yield and hybrid. That's what I've done. It's extremely valuable just because, one, you see how a deal is structured from the beginning to the end without you doing it yourself. So you see what someone else is doing and you learn from that. And also having seen a year of financials and reporting and what's happening with the property, that gives you a lot of insight into it, and where it's someone else and you get to ask them questions, their experience, they know what they're doing. You ask them and you know not to repeat any of the mistakes or any of that.
Oh, good. So you went out, and Paul mentioned when we started the podcast out that you just bought a deal in Dallas, but that wasn't your first deal, right?
No.
So you transitioned over and you bought a little small property over in Fort Worth. Maybe tell a little bit about that. Was that a deal that you led on your own? Did you bring some other people in? Maybe kind of tell us kind of the highlights of the first deal that you did as a lead investor.
Sure. So the deal in Fort Worth, I was a key principal in that, and the lead investor was Lane Bean. And he and I got together beginning of 2015 last year, and that's when we realized that we wanted to work together. And he was already on his way to be a lead, but I was not there yet. I knew it would be summer or later in the year of 2015 when I'd be ready to do a deal of my own.
Yeah, so Lane has been on the podcast before. If you remember Lane, he bought a little property over in Fort Worth. He is a Air Force F-16 pilot, real sharp guy, but he went into the transaction asking for a partner. And you put your hand up, and you and him came together to be key principals, really in the same analogy with the pilot and the co-pilot. So Lane was the captain, and you were the first officer. But you signed the loan. Mm-hmm. Lane signed the loans. So you guys were the people who financially stood behind the deal because it was a bank transaction. And that then you went out and you got a bunch of people to be limited partners, and those are some of the people in the back of the airplane, so to speak, to put their money into the deal. So they put the money in. You guys put your money in too. But Lane really was the person that put the whole deal together. He found the property, he put the structure together, and you guys put a lot of money down into the deal, if I remember correctly. How many units was that?
22.
So 22 doors, and you bought that how long ago?
September. We closed on it September 10th of 2015.
So September 2015, and your rents were where, and what are they right now?
So the rents were $500 for a single bedroom and $550 for a two-bedroom. Right now, the rents for a single bedroom are $950.
$950?
$950, correct.
Wow.
Plus RUBS. They didn't have RUBS before, so that translates to at least $1050 for a single bedroom.
Billing back of the water and sewer.
That's
correct, right? Yeah.
That's right.
Well, that just doesn't happen automatically where someone walks in and all of a sudden says, I want to go from 500 to 950. What did you guys do? How did you guys bring additional value so tenants were willing to pay that higher rent?
So it was a lot of heavy lifting and a lot of work, which we had to do the roof, we had to work on the landscaping, the interiors, almost every single aspect of the property needed to be worked on. So the interiors, for instance, we have completely, everything is new. The cabinets, we have granite countertops, new floors, new appliances, everything new in the bathrooms. So when you walk in, it's a completely new unit, including the front door.
Oh, wow. And again, how much money did you spend?
Our rehab budget, we haven't spent it all yet. It's about $500,000.
Wow.
That's it.
And how much time do you spend on it? I know Lane's the captain, but as the first officer, how much time do you spend working on that transaction?
Currently, not very much. When we first started, it was a lot of work. I think the first few months are the hardest. And then to use a similar analogy, once you have all the contractors in place and all the projects going, it's an autopilot almost. So that's
We're
the
full of
phase.
analogies today. So right now it's on autopilot, and so occupancy in the property is pretty high.
It's 100%, and
100%.
we're having to give notices to rehab the units. We're down to the last 6 units that we need to complete, and we already have a waiting list for it. They're all pre-leased for July. This month we're working on 6 of them, and July they're going to be.
So this must have been a special location, though, right? I mean, this was not just your run-of-the-mill location. If you're able to take rents up almost 100% from where you guys bought it, so maybe was that what attracted you about the deal? Just it was in a highly desirable location.
Yes, it was. So that is one of the aspects. It is in the cultural district of Fort Worth, and the surrounding properties were already commanding rents of $900 to $1,000, and it's really prime location.
So why did you become a first officer on this deal? Was it because you wanted to transition yourself at some period of time from the high technology business into the multifamily ownership business? Or why did you become a first officer?
So this was to enable me to do a transaction on my own.
Okay.
And I wanted that on my resume, that I have signed on loans before. And Lane and I had been talking even before we saw the property. So regardless of which property he had bought, I would have been a key principal for him. And this was to enable me to transition to the next step.
And was that a recourse loan, a bank loan? Do you remember how that was structured? Is that how it was?
Yes, it was a recourse loan. Yes.
Any problems or any issues with signing a recourse loan?
Absolutely none.
Yeah.
None.
But you guys raised, the passengers in the back, and you guys raised a lot of money
We did.
in that property. You almost put 30, 40% down, 50% down in that deal.
Yes, we did. We put 50% down.
And it wasn't because the bank required it. The bank was like a little shocked that you guys wanted to put that much money down. And I was a little shocked that you guys wanted to put that much money down, but there was so much interest with the partners in the deal that they wanted to put more money into the deal than have debt on the property.
Yes. We had so much interest that towards the end we were like, either we turn away people and we also tried to do that. We reduced the subscription amounts, but despite that, there was just so much interest. We decided to structure it this way.
That's good. So now you've been in that property for 9 months. You guys just recently acquired a deal about 6 weeks ago or so, and end of April this year.
Yes.
Maybe tell us a little bit about that property. How big is it? Where's it located? Kind of what attracted you to the deal?
Sure. This is also in a very similar to what the Fort Worth property is. It's a very desirable location of Dallas. It's near Uptown Dallas, Uptown, Turtle Creek, Highland Park, the Medical District, and Cedar Springs, Oak Lawn area right there. So
if somebody's not familiar with the Dallas-Fort Worth area, just like Supriya was saying, this is an area is an older area, but it's a highly desirable area too. So how did you find the asset?
Okay, interesting story. So how I found it was at a Christmas party. This was at a Christmas party hosted by Old Capitol. And it was Paul Peebles who told me about it. I was at the party and he pointed me to the broker. He told me, Supriya, because he knew I was looking. For the past 3 months, I know I've been looking at properties. I was talking to Paul almost every day or every other day. I would underwrite something and say, what do you think of this property? And he's been advising me. So he knows what I was looking for, the size of it and the dollar amount. And so he knew this would be a good one for me. And he put me in touch with the broker was also happened to be at the party. And I talked to him a little bit and I instantly signed up. I said, I want to see the property. And 2 days from then, I went with Paul to see the property and the rest is history.
Would you say being invited to the Old Capitol Christmas party is a hot ticket in town?
It so is. Sign me up for this year too. I'm RSVPing today.
Yeah, that's good. Yeah, no, there's 150 of our closest friends there, so that's good. That's right. So I'm seeing a little pattern here. So is that what you're drawn to? Just kind of infill, highly desirable older properties that are underperforming and go, put your touch on and add a lot of value and raise rents?
Yes.
Pretty much just your MO.
That's what we want to do. That's the plan.
Well, that's good. So tell us a little bit about this. What was wrong with this property?
This is very similar to the other one. Everything. It has.
Yeah.
I'll stop you right there. What was wrong with it?
Everything.
Everything was wrong with it.
Well, let's talk about what's right with it.
Yeah.
So actually, the location's very good, and it's 100% occupied. So these are very, very desirable. And what's wrong with it is it needs new roofs. It needs a new parking lot. It needs the chiller system is down. It's all window units, and that's not how I plan on operating it. It's going to have new windows, new exterior paint, new everything on the inside, landscaping, name it, and it needs work on that, plumbing and everything.
So what do you guys buy the property for, and what are you guys going to put into it?
Bought it for $2.6 million, and the rehab's going to be over $1 million,
Wow.
million two. That's what we're
It's
looking
almost
at.
half.
And again, how many doors?
53.
53 doors, $1 million into it.
It's a lot. That's good. So you guys just bought it, so you're just getting your arms around it. You haven't really been able to implement the rehab plan fully yet. So what kind of lift are you guys expecting in your rental rates?
So this one too, I'm expecting it to be 50% over. It won't be 100% like the Fort Worth one, but at least a 50% or more in the rents. And currently we've started the rehab, the roof's in progress as we speak, and we're doing some electrical work. And we're also starting the chiller work very soon, so we can get rid of the window units.
Let's go back to when you looked at the property for the first time and then you started to do the analysis of the financials. What was the first thing that stood out in the financials from the seller?
It didn't take me much time to look at the financials
It didn't
from
take
the
you
seller.
very much time at all, did it?
It was a blank sheet of paper. So it was very clean.
It was a very, very white sheet of paper.
Yes.
You're right. And so sometimes these smaller properties, when they're run by mom and pop organizations, the financials sometimes are difficult to come by because it may be a shoebox that's only given out to the accountant at one period of time right before tax season. But some of these guys who are looking to sell the properties, they don't present the property very well. So when they hand a blank sheet of paper to the broker does not want to make stuff up. So they just give what the seller has given to them in their financials. And this guy, I can't say it was a clean white sheet of paper, but there were some things that they were on there, and it was very difficult to try to make sure the numbers. So what we had to do is use kind of a market analysis, kind of what market income was for the area, what market expenses were. We kind of had to put that together, because when we brought those to the bank, so to speak, the lender had to make 100% sense about what was going on. Did we really have an idea of how this property has worked historically in the past and how it's going to work in the future? So tell me a little bit about, to give you a perspective of how much money you were going to spend. Did you put on a general contractor to look at the property? Did you bring some of the vendors into the deal? I mean, that handle electrical or plumbing or HVAC? How did you do your analysis of your physical needs?
So some of what you said, or maybe all of what you said, we brought in general contractors.
Okay.
And also some of the vendors we worked with in the past in our other properties. So that's where experience comes in. You're in multiple properties. And I also talked to my other contacts and the people who are running other properties and the other deals I'm in as a passive. I talked to all of them, got contacts from them, and I had people come and look at the roof, the chillers, the HVAC, the parking lot, the interiors, and that's how I got my numbers.
So that's one of the benefits about being in a couple transactions, is that the other people that you're partners with will help you with some vendor referrals that have been successful for them.
Mm-hmm.
So,
yes.
So they put together a budget for you. Your management company put together a pro forma, and once we were to fund the loan and give you the keys, how are you going to operate the property?
Yes.
And so, and I know it's early, but what were some of the challenges right from the period of time that you took over the property? What did you notice that you didn't know going into the transaction after it closed?
So some of the things which we noticed as soon as we got in, the first thing was that we didn't have a computer on the property. It was gone. It was there when we toured the property and all of that. We didn't have a computer. And then the next surprising thing was how little of the work orders that the previous owner had been taken care of. The minute we took over the property, we had just all these residents coming in telling me this is not taken care of for 3 months, for 4 months, for 5 months. And just to keep up with that, it was a lot. The first few weeks were just trying to take care of all the work orders. I think that was the biggest challenge.
How much are you going to be all in on this deal in terms of acquisition price plus the rehab dollars?
It's a little over $4 million.
$4 million? Mm-hmm. And so what do you think you're going to be able to move your rents from today up after you do all the work? You think it's going to be almost a double like you had over in Fort Worth?
It won't be almost a double. It'll be close to that in some cases, at least for the 2 bedrooms. It might be close to a double.
Yeah, it's amazing in that submarket. And that's one of the things, location, is that you have to be familiar with what's going on in submarkets. Is it a gentrifying? Are they trying to put money back into the properties into the area? In that area, which is close to Oak Lawn, close to some of these high net worth areas, is lots of money going in. And so I shared with Supriya that there's a property that someone's looking to sell that has done all the work on the property, and they're trying to sell it right now for about $160,000 a door, probably kind of a model match to yours.
With the chiller?
Yep.
Wow. That's high rent district, no question, huh?
It's amazing. So, I like to say, she's putting, these older properties and giving them new life. And that's something that we do a lot of. And, I think that we support trying to take these older properties and bring them around, mm-hmm. and making them a great place for some people to live in. What are some of the challenges that you have found on the property from the tenants? Anything that strikes your fancy or funny that you would think once you took over the property that somebody came up to you and said, this is what the last owner did?
Yes. So something that we saw was really funny, and I didn't expect to see it. There was this one person in one of the units. He called us and he said, I have a problem in my house. The roof's leaking, and clearly it had been raining ever since we acquired the property. So we went in there to look at it, and he had 2-3 buckets in his bedroom.
Buckets.
And so we said, okay, we'll take care of it. But we looked up, and that seemed like an old one. And that's when he told us. He said the previous management hadn't been taking care of it. He said it's been 4 or 5 months, and they kept telling him the new owner will do it. The new owner will fix it. So so he's been waiting for us for 5 months
Wow.
with buckets in his bedroom.
Wow, that's good. So knowing everything you've done, going through all these challenging properties, what's kind of next for you? What are you looking forward to do next? Are you going to do more and more of these deals, or kind of what's the future?
For sure. This is too exciting to not do more of. And I have old capital on my side, and this is a great team to have. And that's...
So we talked about earlier, you're just going to try to focus maybe on the infill, smaller value add type properties, or are you going to try to do bigger deals? We'll just keep doing more of the same?
I'd like to do more of the same. I want bigger ones too, but whatever comes my way at the time when I'm ready to do it. It depends on what comes. It definitely needs to be value add for me and my investors, and that's what I'll go for.
You've had a lot of challenges in your life. You came from India. You came to the United States years and years ago. I mean, you didn't have any multifamily experience. You hardly had any single-family experience. You jumped in. You've had breast cancer. You've overcome, I would say, a couple challenging things that a lot of people can't overcome, and you were able to overcome. Do you think other, say, women could do this just like what you are doing right now? Is it something that can be done by women and solely by women?
Yes, of course, Paul.
I know it's a stupid question, but what happens is we get a lot of people that listen to this that are guys that sometimes they don't jump in. But I think this is for women. This is for men. People can get into this business. This is not just one side of the gender. This is everybody can do it, and Supriya is doing it and doing it well.
Correct, because I'm not doing any of the heavy lifting myself. So like you said, it's both for men and women. If you have an aptitude for it, and there's nothing to be afraid of. And I did it with the help of a team. I didn't know everything, and not everyone, when you get into something, you don't know everything. So you ask the experts, you talk to them, and that's what I would say. Don't be afraid. And that's one trait. Maybe I was born with it. Maybe I've acquired it. I don't know what it is, but I'll talk to people, try to get advice from them, and that's how I've been successful.
That's great. So if you could take one big takeaway, maybe you could leave everyone with, is there something that you learned along the way that a little surprising getting in the business, maybe something that was a surprise to you that you didn't know when you bought your first property, maybe some words of wisdom for an aspiring first-time apartment owner? So
one thing I would say is what I probably didn't know is how successful one can be in real estate. It's very forgiving. Real estate is not something where everyone makes mistakes along the way. Just because you miss a step or you don't do something right, anybody can be successful in this. It's just you need to know and want to do it.
That's right. Yeah, as long as you don't make a fatal mistake, the real estate is pretty forgiving, especially when you have low rates on your debt now, and you have a healthy capital budget, and you got good management. You can overcome a whole lot of missteps.
Correct.
Along the way. So.
And I would say don't do it by yourself. That's another big piece of advice. Don't try to talk to the people who know it, people who've done it before. Talk to your broker. Talk to your other
How about your mentors? So how big of a role did your mentors play in this?
Huge.
Yeah.
Huge.
Tell me a little bit more about that and how that worked.
So in this investment club, we have mentors assigned to us.
Yep.
So that's a big role. I would schedule meetings with them almost every week. I'd have a half an hour session or 1 hour. And along the way, I would tell them what I'm doing, and they'd give me advice. So it's them, it's the other members at this club, and also the other leads. And Paul, you had a big role to play. You know that. You know how much. And there was also my agent, my broker, who was representing me. So I had multiple people who were helping me. So I'll say I didn't do this by myself. So
last thing is let's talk a little bit more about the financing on this deal, so people can understand. This wasn't a Fannie Mae loan. This wasn't a Freddie Mac loan or an insurance company loan. What type of loan was it? Do you remember?
Yes, it's a bank loan.
It's a bank loan. What was the amortization on the deal, and did you get some interest only on it?
Yes, we did. So it's a 4.75% for the first 5 years, and we got interest only for 18 months.
So that helps you out to kind of cash flow the property when you're doing the rehab to the deal. That was a recourse loan or a non-recourse loan?
It's a recourse loan.
And you had a couple people sign with you, so now
Yes.
you are the captain, and you had a couple first officers join you on that.
Yes, I did.
And just like on the last transaction where you were the first officer, a lot of the limited partners, the people in the back of the airplane, they didn't want to put in 20% down or 25% down. How much did you guys actually put into the deal?
We ended up putting 40%, and we could have done more, but I just limited it that. This was also very, very popular, and just because of the location, I think there's so many people who wanted to be in this that it was incredible. And Lane's with me on this. He's a key principal. He signed on this.
So were you were with him on his, and he became with you on yours?
Yes.
When this podcast will play, Lane actually is getting shipped over to Afghanistan, I think, to fly for the
Yes.
U.S. Air Force. So our prayers are with him too, as an F-16 guy. So, well, we can't say enough for how helpful you have been to have us kind of jump in and ride on your shoulders on this experience. You've done a great job. You found this property. You took advantage of the opportunity. You put your team together. You closed on the transaction, and I'm sure you have a couple happy investors.
Several happy investors. Yes, thank you.
Well, good. Anything more, Mike, to add?
No, we just definitely appreciate you coming in and sharing your stories, and what you said resonates with me. That is a team sport, right? You need to have good team members on there, and that's very critical. And we appreciate your business here at Old Capital and letting us be part of your team.
Thank you. Thanks,
All right. Thanks, Supriya. We appreciate
Thanks,
it.
Paul.
Thank you for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitallending.com to sign up for our weekly email updates. We'll see you here next week with another great interview.